it reminds me of, or it makes me think of this. If you and I could go back, just say 10 years, and we were just getting started, and our electric company said, okay, you have an option here. You can lock in what you pay for electricity for the next 30 years.
Right.
I mean, it's a no-brainer, right?
Well,
Considering
exactly.
it, that I think we heard yesterday or this week that we heard that the Edison went up like 22%. It's going to go up another 6% next year. Well, if we could lock it in 10 years ago, it would be like we're paying, nothing for electricity. Well, the same thing holds true for, housing prices and the cost of ownership. When we can lock that in, like you said, it is a bet that you cannot lose on because you hold all the cards.
Exactly right. And part of the reason for that too is consider that home with that 30-year mortgage in a lot of scenarios, in a lot of financial environment situations, it's an inflation hedge.
Mm.
You know, if you got a, I mean, in fact, our recent period of time here, last 4 or 5 years, is a great example. I mean, imagine when you bought, if you bought a home in 20 or 21, yeah, the price of the home had gone up, but you were able to lock down for 30 years a 2.5, a 3.5% mortgage, and then inflation goes to 9%. Well, what did that do to your home value? It went up even more, and yet your interest cost was
Mm.
fixed at that 2 to 3% range. That is a great example of the inflation hedge benefit of, number one, home ownership, and number two, home ownership with a 30-year loan. And now the problem I think we have currently is the belief that, oh, that opportunity has been lost. These current mortgage rates, oh, they're terrible. They're not affordable. I can't possibly participate in this option, in this opportunity. Well, see, that's where I keep reinforcing the message that, first of all, rates are going to be around at these levels for a long period of time. The Fed is signaling that to us. And again, the Fed doesn't control mortgage rates directly. It's all about the bond market. Rates are going to be in place at these levels higher for longer. If you can't afford these current rates, which we can help you determine that, the idea here is go after that home ownership now. Use this 30-year mortgage that Warren Buffett thinks is so great. It is an inflation hedge. It's a one-way bet. Then layer into that a temporary buy down. So that what that does is it gives you that interest rate and payment relief for 2 to 3 years to then allow for general mortgage rates to eventually fall. So then you can exercise that benefit of the one-way bet and refinance into a lower note rate. And then you've got a new 30-year term at even lower rate. And what's going to happen when rates fall to give you that opportunity, that home value is going to go up from what it was when you bought the home. So it's really a win-win situation.